Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me on this Monday morning for a market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, happy Monday to you.
Happy Monday. And you know, it's National Chewing Gum Day today.
Yes, so I know that we talked about this earlier, but that means that we're celebrating chewing gum?
Yes, celebrating chewing gum, and we can't chew it on the broadcast right now, but afterwards I feel like I'll have to have a piece on the way home. And I'm glad I'm not in Singapore where that sort of thing may be frowned upon.
Yes, so we won't be chewing gum today on the show, but we have a lot to chew on, right?
Absolutely, absolutely. a lot of news, a lot of stuff this week going on. You know, in terms of the outlook, it's all really like jobs all week this week. We have JOLTS tomorrow, job openings. We have ADP on Wednesday, and then the big employment report on Friday, which is really important. And then we also have an unbelievable number of Fed speakers.
Yes.
I think we have 11 different Fed speakers this week, and I started counting who actually isn't speaking, because they're like all on the wire. And then Powell, I think the most important. I think Powell was due at like 1:55 today. We'll see if he has anything specific to say, but it'll start giving us a better sense of what the Fed is thinking. And I just checked this morning before we went on the air, and the market is now back to looking at pricing in 25 basis points in November and 50 in December. So the market is pretty uncertain, and when the market's uncertain, data is important, and what the Fed speakers say is also important.
And as Tai mentioned, this week we will be getting the jobs report for the latest month on Friday morning, 8:30 a.m. Eastern Time. And we get non-farm payrolls, we get the unemployment rate. But before that, as you mentioned, we get JOLTS and ADP. So lots to watch in terms of the labor market this week.
Yes, and it matters right now, and certainly as we head into an election as well. You know, so the news and so as the market confident really matters. It certainly matters, I think, that when in an election where nobody, I think Vice President Harris might be slightly favored, but well within the sort of the range of error of the poll. How people feel is going to matter, and I've noticed driving around in New York City and filling out my car that gasoline prices are the lowest they've been. In fact, I think I got gasoline below $3 a gallon.
Oh wow,
I don't think I've seen that since the last Trump presidency. So the mood is going to be pretty important. This week will be an important week to really set the mood, I think, for the last quarter of the year.
Yeah, and you bring up an important point because the countdown is on to the presidential election on November 5th. So today is the last day of the third quarter, the month of September. So it'll be important to keep an eye on the economic data, because we all know that the economy is a key issue that all voters are paying attention to in this election year. And of course, tomorrow evening we get the VP debate between Waltz and J.D. Vance. So that'll be something that we will be watching very closely as well.
It's could be a little unpredictable, because Vance has probably had more time in the limelight. He's certainly perhaps the more controversial person. I think tomorrow will be, let's not make any mistakes, let's not do no harm to start with, and try to score a few points, like hit a few singles, look good, don't create any issues. And as you mentioned before, I remember the election in 1992 between George Bush the father and Clinton, and the term that it's the economy, stupid. And you could argue that the downturn in the economy after the first Gulf War was what cost Bush the father his re-election. So it's very important.
Yeah, and as we wrap up the third quarter of 2024, as well as looking back at the equity gains for the Dow, NASDAQ, S&P 500, for the major averages, they're all up by at least 10%, even higher for the S&P and the NASDAQ, up by over 20% year to date. So that is significant.
I think it's good. It looks like it will be probably a pretty good year for stocks overall. But what does that set us up for 2025? And I think we'll be discussing that as time goes on, and certainly at post-election, hopefully we know who wins relatively shortly after. Like the morning after would be fine, but let's not have a few weeks of uncertainty, which would certainly not be good for the markets. But we're up so much this year, depending on what the politics looks like 2025, maybe a more difficult year. And we've seen that in the past in terms of before, we get a really, election years are good, but then the post-election years, now we have to sit there, sober up, and look at what policy has for us.
And of course, as you mentioned, we are looking ahead to the month of November. We start off October tomorrow, but if we look at the calendar for the first week of November, as you mentioned, in addition to the election, we get the jobs report on November 1st, and then we have the election day on November 5th, and then the Fed meeting right after that with their rate announcement. So a lot to look forward to, isn't there?
In fact, the first time I can remember that the Fed actually moved their meeting to Wednesday, Thursday because of the election on Tuesday. So, if you're an options buyer, make sure you don't buy the Wednesday. Sell the Wednesday and buy the Thursday.
I know, that is important to keep in mind.
Yes.
But since we are about to wrap up the month of September, let's start off by looking at where the market is on this final trading day of September. Right now, we are seeing the Dow lower off by over 70 points. Earlier, the Dow was lower by over 200 points. And right now, the NASDAQ is in the red this morning. It is off nearly 11 points, but has turned nearly flat on the session. As for the S&P 500 on this Monday morning, right now we are seeing it trade flat. So, Tai, let's start out by looking at some of the headlines that are driving the news this morning. But I think right now, while we're looking at markets, let's start out by looking at China, especially given the gains overnight we saw for the stock index overnight.
So another huge day in the Chinese markets, depending on what, and this is on the back of the monetary and fiscal stimulus. And one of the things that came out, property's been a big problem for them because unsold properties, apartments that people paid for that haven't been completed because the firms are basically going out of business. China Evergrande is the one that really comes to mind. Well, one of the things that they changed, so in China, there's this thing called an internal passport. It's called huku in Mandarin. In Cantonese, we call it wujiu. And it says if you don't have that passport, so let's say you live or you were born in southern China, you couldn't necessarily go and buy something in Shanghai, right? You needed that passport. So what they did was they announced that in Shanghai, Shenzhen, and Guangzhou, which are some of the three of the biggest cities, in Guangzhou, all restrictions have been lifted. So anybody can go and buy literally any property there. And in Shanghai and Shenzhen, which is up near Guangzhou, which is the center of their Silicon Valley in a way, I suppose, they've lifted a lot of restrictions. So let me read. I spoke to somebody I have a lot of respect for, who really watches China very carefully. I'm going to read his comments to me verbatim. I'm going to keep his name out of it because I don't think he wants to be public. He goes, there are comments online that the Chinese went crazy after the latest round of stimulus. Lots of people who have nothing to do now are motivated to trade stocks and buy properties. Everyone now wants to gamble on stock and property rebound. People are begging banks to get as much loan as they can get. Animal spirits are unleashed. So let's look at graphic number 1. Let's take a look at what the markets did today in China. So look at, on the right-hand side, those bars are just unbelievable. And this is their sort of the benchmark. I think it's up 4.5% today after it sort of gap open higher. People are there's a lot of FOMO. Well, oh my goodness, this is the biggest move since 2008. We can't afford to miss them. I don't see charts like that. So let's move to graphic number 2, which is the CSI, the same benchmark since 2006, to give you a sense of perspective. So you can see that massive rally on the left side of the screen, and that was really the golden era of China. Drove base metals higher, iron ore higher, all markets higher when they were growing like gangbusters. So it was really the first decade of tremendous growth. And then you see the financial crisis, it came down, and then it's moves then. So now, at the right-hand bar, this is a monthly chart, so each bar is a month. It's a big move so far, all in 1 week, and there's probably more room to go. So my thinking here is, now they're off now for 7 days, October 1st to October 7th for their golden week. They're celebrating the 75th anniversary of the founding of the People's Republic. So markets won't be back until October 8th. and they'll give people a little time to think about it. But if one, my friend, the China expert is saying, I think there's more room to run here. And if you look at this, this monthly chart, for perspective, we can certainly rally a little bit higher. So don't get in front of it. If you're long, great. If you want to buy a little more, there might be a little room to go even a little higher. Part of it is a lot of the local quantitative hedge funds have been hurt substantially here. What they would do is they're doing this market neutral strategy where they were buying individual stocks they like, but to hedge it, they were selling the index, and the index has soared higher. So they've had pretty bad margin calls. I think the market isn't trying to hurt in China, isn't trying to hurt anyone, so they're giving people a little more time. But there's a lot of short covering as well. So I expect this, if the people of the retail investor is really getting into it, they can drive prices substantially higher. So the question then is, maybe they'll hit their 5% this year, which is fine. What's really important is, has this really turned the economy around? Are people who aren't speculating in the markets, in the property markets, in the financial markets, do they really feel confident? Do they, is this economy different than it was for all of this year when people were really, really depressed? So I don't know. I don't know if they've managed to do that. In an economy where they're trying to pick winners and losers, that's still a big risk. So that remains to be seen. But in the meantime, if you're a Chinese investor, if you're an American investor investing in ADRs, I bought a little bit of the Chinese ADR just to have something in it, so I have something to watch. Enjoy the ride.
Yeah, and you bring up an important point, something that we've talked about in the past, especially given the recent stimulus measures and the announcements from the PBOC, whether or not this will be enough in the long term to shore up the economy, especially the property sector.
That's right. That's right. And the property sector was a big leader, so they're trying to turn it around. It remains to be seen if they, if they'll need to do more.
Well, we'll keep an eye on this sector, but before we move away from China, I do want to take a look at the AI announcements that came out. So we saw that Cambricon Technologies soared 20%. It hit its daily limit over there.
Yes.
And this did come on the heels of an announcement regarding NVIDIA chips, didn't it?
Right, right. So the Chinese authorities have said it's not a rule or regulation, but sort of a heavy hint that we would like you to buy fewer NVIDIA chips and buy more locally produced chips.
Okay.
So let's take a look at graphic number 3, because this is interesting. NVIDIA's, and this is from Bloomberg, China remains a key market for NVIDIA, but look at how much NVIDIA's revenues from China and Hong Kong have dropped over the past couple of quarters. Very important for NVIDIA. This may weigh on NVIDIA, but it certainly did on Thursday. I think NVIDIA closed down maybe 4%, cutting off a rally that they'd seen for the last couple of days. So there's U.S. export curbs, but if for the chips that aren't being restricted by the U.S., China says really try not to buy them. Not sure how much the Chinese companies are listening to that. They may pay lip service to it, but at some point, there are stories that some companies are buying as many as they can, while they can, because in order to run a lot of AI, you need these chips. And the Chinese makers like Cambricon are good, but they're probably some years behind in terms of being able to have these GPUs to run AI effectively. So it'll be important to NVIDIA, something to keep our eyes on.
Yeah, absolutely, because even though there might be this mandate for local alternatives, in reality, we don't know what the gaps might be in terms of technology, as you mentioned. So
that's right. That's right.
And Tai, let's stick to Asia and take a look at Japan. So in the aftermath of the election last week, we saw a lot of movement in the Japanese yen, and Japan will be going to the polls soon. Incoming Prime Minister Shigeru Ishiba said he intends to call for a general election on October 7th. But given some of the uncertainty regarding monetary policy out from the Bank of Japan, we've been watching the yen closely. So tell us what's going on this morning.
So Japanese industrial production for August came in awful, minus 3.3% for the month. The consensus was minus 0.9%, so quite poor. I think that in combination with Ishiba, who I think maybe a little bit of a monetary policy hawk in terms of we do want higher interest rates. So you've got a weakening economy and a BOJ who's ready to probably hike at least one more time. Market just got caught in a little bit of a bad mood. So Nikkei was down, I think 4.5% or so. I know at one point overnight it was down 5%, which is quite substantial. And certainly the very, very likely the Ishiba will be the next prime minister, but I suppose that's why you have elections. Or at least in most countries, there is some level of uncertainty. I do expect that he'll be the next prime minister, but Japan bears watching. The yen carry trade, the mood, and the mood that also translates to the dollar. Because yen weakens dramatically, it's going to make the dollar look stronger. And I would also add that we had inflation reports out last week. It was Spain. I think it was Spain and Italy. This week was overnight. I think it was France and Germany. And inflation looked fairly subdued, and it looks increasingly like now that Germany may have no growth this year. So the ECB, middle of last week, they didn't think the market didn't think it was going to get a rate cut in October. Now it's like 80%. So it seems like the Europeans are going to cut, and if the Japanese necessarily don't raise, it may be good for the dollar, which has been trading at the extreme bottom of its range, but seems to be relatively steady. So a stronger dollar right now would probably upset the apple cart. Might be getting a little ahead of ourselves, but something we're keeping an eye on.
Well, Tai, because you mentioned inflation, I do want to switch our focus on over to a potential strike that is looming.
Yes.
So October 1st, that is the deadline for the ILA to reach an agreement. Doesn't look as though that will happen, and that's going to have ramifications for the U.S. economy. So I do want to touch upon that. But before we move away to that, because we're talking about inflation around the globe, so I just happened to look at an emerging market report for some areas of the world, and I saw that in terms of expectations for CPI in a country like Turkey, it was double-digit percentage point. And I hadn't been watching inflation expectations in that country, especially CPI. So I was surprised at the number, because compared to the U.S. or other economies that you and I have been talking about, that is a staggering amount, isn't it, when you see double-digit percentage points?
It is, and places Argentina, you sometimes see triple digits. I remember my daughter visited Argentina. I said, "Oh, bring me back some pesos," because Dad, they're going to lose a lot of value. I'm like, "It's okay. I just want some pesos." But and Chair Powell he talks about it pretty much all the time, and I think most Americans, don't really think about it. I mean, inflation's on our mind more than it has been for a long, long time, and it still has. Even though the level of prices are high, inflation itself, the prices aren't going up as dramatically as they were before. But inflation expectations, as you mentioned, in Turkey, it's double digits. Every year you expect double digits. So if you're a worker, you expect double-digit wage hikes. You expect you price things higher. You don't hold on to a lot of cash. So once that gets into an economy, it's really hard to dispel. And President Milei of Argentina was here last year. I think he's maybe gotten inflation down to something like 40% on an annualized basis, which will be shockingly a huge result, a huge accomplishment if he actually manages to get expectations down low enough that you don't automatically mark up wages and prices, so it's a cycle that never ends, and then you can't really plan. I mean, how do you buy, do you want to sell stuff now when next year you know it's a lot higher? It just changes the thinking in a way that we as Americans don't really know. But as you say, we should talk about that Taft-Hartley Act. Get that in a second, but this port strike is going to happen tomorrow. As a matter of fact, I don't think they've had negotiations in the middle of June. And I understand that the International Longshoremen's Association, or this part of it, they want a 6-year contract with 77% rate. 77%. So those are the double-digit numbers that we're talking about. Like, really, 77%? You have Boeing, the machinists, want 30% over 4 years. So I think that Boeing strike, the friendliness of this administration to unions, or at least certainly paying lip service to it, is getting people to say, well, you know what? Let's ask for the moon, because maybe we'll get it. They also want certain things, like they don't want to automate a lot of things on the at the docks, which will keep more jobs, will make things a lot less efficient. So I think we're going to be in for some time here. Now, President Biden said, I'm the most pro-union president ever, and I'm not going to use this to push the union. Let's take a quick look at graphic, at graphic number 4, because I think his mind may change over time. So these are the ports, the major ports are going to be shut as of tomorrow afternoon and tomorrow night, all along the eastern seaboard, in the Gulf. On the right-hand side, you can see the imports that will be affected. Tin products, probably not going to matter to too many people. Oh, dairy products, eggs and honey. I went to Costco last week, and they didn't have eggs. It's not as bad as it was during some parts of the pandemic, but they didn't have eggs, and it's not the first time. So people will actually sort of see that. Coffee and spices are high up on the list. Copper products, and then our tobacco exports. If you look at the bottom half of that on the right-hand side, will be heavily affected. So I think it'll go on for a week or two, and then I think there will be some portions of the economy that will say, this is actually starting to hurt. We prepared for it, but do we want a really any hiccups in the supply chain right ahead of the election? They may, the administration might think, you know what, we're going to not want to do anything to anger labor ahead of the election, so they may let it sit. But it's, every week they're out, it'll take a month to recover. And then let's talk about the Taft-Hartley Act, which is graphic number 5. I put some bullet points here so our readers can see it. So if a strike in 1947, the legislation passed that said if there is a strike that can really imperil national health or safety, the president could basically ask the courts, a federal court, for an injunction, which means have the federal courts order the workers back to work. It's an 80-day cooling off period. They go back to work, and both sides can negotiate. If after 60 days there's still no contract or nothing to agree on, they'll take the employer's last offer and tell the workers to do a secret ballot. If the secret ballot passes, so this cuts the union out of it, which is why if you're pro-union, you say you're pro-union, you don't want to use Taft-Hartley. That cuts the union out of it, and if the workers, a majority of them say we want to go back to work, they will go back to work. It's been used, if otherwise they'll negotiate, but it's been used 37 times. The last time was George Bush the son, and it was 2002 to solve a West Coast dispute, which it did. So I don't think we'll get a lot of movement on it, but as it sort of extends well into October, people are going to be talking a little bit more about the Taft-Hartley Act. But if you're looking for 6 years and 77%, I don't think the U.S. Maritime Alliance, which is that group of employers who do it, are going to have any interest in doing that, because labor costs, I mean, what was really interesting, I talked with a restaurateur last week when Dan was interviewing him. He said labor costs, skilled labor costs have really been, have doubled. And, and I see that in sort of workers around, around me as well, that sometimes you hire to do things around the house. Labor costs have doubled, and they're not going down. So I think the Maritime Alliance is going to hold their ground here. So it'll be interesting to see how this plays out.
And as you mentioned, a shutdown of the ports could cost the economy up to $4.5 billion each day. And you mentioned supply chain, obviously, so it makes us think back to the pandemic. If you're going to the store, you can't find eggs, or you can't find staples that you've come to take for granted. And the longer the strike continues, then the longer that we're going to be seeing a supply chain crunch, and obviously we might start seeing layoffs as well on the heels of this.
You could see some layoffs, and you could also see a little bit of hike in inflation in terms of shipping rates, freight rates have been going up in anticipation of this. In fact, the administration has come out and said, well, we don't want anybody gouging on freight rates, but it's the market. Right? Whenever I hear price gouging, it's sort of when the market demands it, and they can make a little extra profit. They ought to be able to, because are you subsidizing them when they're not making money and not making any profits? We don't subsidize. So price gouging, I think, is something that should be touched by the government only in the rarest of cases, and it won't be in a case like this. But it might goose inflation a little bit, and it means maybe in 2025 we may get fewer with fewer rate cuts if this happens, if this extends for a long time. I mean, I think it'll be a few weeks to months.
Yeah, well, the countdown is definitely on, Tai, so thank you so much for joining me, and I look forward to sitting down with you tomorrow.
Great to be here.
Thank you.
Thank you.
And coming up, Dan Ives of Wedbush Securities will be joining us. Don't go away. We'll be right back after a quick commercial break. Welcome back to Global Money Talk, brought to you by Sampro TV. I'm here at the New York Stock Exchange with Dan Ha, the partner at Karani Asset Management. And Dan and I, we are both joined by Dan Ives of Wedbush Securities, Managing Director and Senior Equity Research Analyst. Good morning, Dan. Great to see you. Thank you so much for joining us.
Great to be here. Thanks.
So Dan, I wanted to start it off by asking you a question about looking back over your entire career covering tech. So you've been covering tech for 25 years. I'm sure you've seen plenty of companies with promising technology that just fizzle out, that never really made it or never really materialized. What's been their common thread? What do they most often get wrong?
I think what they most often get wrong is not understanding how competitive the landscape is, getting hubris, not having the right go-to-market strategy. Competition ultimately goes past them. I mean, to some extent, it's just, I mean, if you look at Intel, I'm not, as an example, and look what's happened at Intel, right? I mean, relative to other chip players. But in terms of on smaller companies or even some of the most innovative, you could have the best technology in the world, you still have to sell it. And I think that continues to really be that 1-2 punch that companies need to have.
Got it. What about the sort of the common thread among the winners? What would you say that universally that they do well?
Well, I think first off, it's managing teams. Like if you look, probably the
Okay.
best companies that I've ever covered, they all have some of the best elite management teams out there. I mean, whether it's private or public. And I think that's one thread. Two, they need a technology move. I mean, we could talk from Mag 7 down to Palantir to other even, smaller companies. It's a competitive moat that I think differentiate the great ones, the special stocks, from the ones that are kind of, maybe mediocre, middle of the road. And I think also it's about the market opportunity. Like, it's like, are they positioned in growth areas? Like when you think about some of the biggest growth areas now, AI revolution, cybersecurity, a lot of the shift to the cloud, and then some of the other disruptive technology areas, you want companies that are in the right spot, not just great companies in okay sectors.
And Dan, you weighed in on both the winners as well as some of the not so winning teams, but I understand you must have a lot of conversations with management teams, both public as well as private. So can you break down what you see among some of these teams and what leads to success?
Well, I think what leads to success is, I think, managing teams that ultimately bring the right people into their company, from sales to marketing to software to engineers to developers. I think that's very important. And also, look, a lot of these companies, they're going to go through periods that could be rocky. Can ultimately they retain these individuals? It's very competitive, right? So I think that's one of the successes. But I think the other thing is skating to where the puck's going, understanding where the technology, where the innovation, where the market opportunity is. I think when you look at, and again, these are obviously some of the best companies in the world, but I think even when you look at like Jensen and Nvidia, I mean, you go back 3 years ago, investors are like, this is ridiculous going after AI. You should just focus on gaming. They were telling Nadella in 14, forget cloud from Microsoft, focus on Windows. Go back to Cook and Jobs, right? Don't focus on services, just focus on hardware. My point is that it's managing teams that understand where the technology is heading, but they can navigate to get to the other side.
And on that point, I mean, finding visionaries, obviously it's easy in hindsight, but finding them early, just like you said, when the market was doubtful, when the market was doubting Jensen Huang or Satya Nadella, identifying them before it all happens is extremely difficult. So what do you look for in them? How do you identify them?
Yeah, I mean, look, we've kind of spent our career trying to identify those early. Now, look, some you're going to get wrong,
Right.
but that's why, I mean, what, 3 million miles flew in the last 20 years? Like, the point is, like, you have to see these things up close. You have to spend time with the customers, with the management teams. You got to understand where the disruptive technology is ultimately heading. And I think a lot of times you're betting on the company, but you're betting on the management teams. You're betting on the board. And I think like another good example of that would be like Palantir. Palantir, 9 months ago, investors are like, this is a government software company. Look today. I mean, now they're really at the forefront of AI use cases with AIP, with everything that CARP has built. That's why they're the Messi of AI. the point is, Palantir is a good example of like, if you're able to just do the work, speak to customers, speak to the channel, understand where the industry is going. That's some of the best opportunities that you're able to try to understand. But also, it's also navigating the noise, right? I think a lot of times these stocks, they sell off on maybe a rumor, on a bad quarter, whatever it may be. But I think sometimes that's created some of the best opportunities. You know, if you think about the market, especially over the last few years.
And on the earlier point about companies that have not succeeded, that had an interesting, promising technology but fizzled out, you mentioned some of the reasons why they didn't work. But are there certain signs that you look for in management teams as sort of a precursor of hubris or companies falling behind on innovation execution? What are some of these things that you look for?
Yeah, I think it's also dog eat the homework type excuses. Like it's situations where you're trying to really understand situations and not necessarily take management excuses, because sometimes, and there's management teams, they don't own up to things, and it's sometimes seeing through some of those things as well as doing the work yourself, where you could triangulate, right? Like you could kind of be like, okay, like 1 plus 1 doesn't equal 3, like something doesn't add up here. And I think those are sometimes red flags. I also think it's talking to customers, it's talking to channel partners, it's understanding the competitive landscape, because a lot of times there's companies where they think something much different than the reality of what's actually happening with their company. And I think sometimes that dislocation is where you could also find alpha, both on the
Right.
long and short side.
And Dan, I do want to ask you, what are some of your most out of consensus calls right now?
Hmm. I'd say in terms of out of consensus, I think Salesforce is definitely an out of consensus call. I think most investors are still pretty negative there, not realizing the AI strategy that's starting to morph. I actually believe they're a huge under the radar AI play that's now about to sort of hit that next level based on all the work that we've done. I think Tesla is an out of consensus name. I mean, we think it's the most undervalued AI name in the market. Will be a robo-taxi day next week. I think that's a good example of one where I think sentiment's still very negative, even though stocks had a move here. And now be an example. I think overall, as a subsector, probably cybersecurity. Cybersecurity, I think, is probably the subsector that could have the biggest move in tech over the next 6 to 9 months. I think sentiment's pretty negative to subdued on that. And that would be names like CrowdStrike, Zscaler, Palo Alto, CyberArk, among others.
Speaking of that, I think there is quite a bit of confusion, and rightfully so, as to where value is going to accrue as AI plays out. We've got the mega enterprise software companies like Microsoft, who really has installed base throughout corporate, not just America, but globally. And then you have application software companies that really are on top of the operating systems. And then you have, these cybersecurity companies where some might argue that just like the recent CrowdStrike Microsoft incident, maybe in the future it makes more sense for these larger guys to more and more vertically integrate cyber capabilities onto their own, into their own operating system. So there's a lot of debate as to who's going to make the most money, if you will, as AI plays out. So how do you see that playing out, which I think is why might be weighing on companies like Salesforce or some of the more, I don't want to say point solution, but some of the more specialized cybersecurity software companies?
No, I agree. No, I think, look, you bring up a great point. I mean, ironically, this year, if you think about 2025, AI has probably disrupted more sales cycles than actually been a tailwind in software. I think we saw it with Salesforce. You've seen that with UiPath, a bunch of others, maybe even MongoDB. Look, I believe this is going to be an 8 to 10 year build out in terms of AI. And I continue to believe it's the biggest transformation I've seen covering tech. And I go back into 1995, almost 1996 moment, but not 1999 tech bubble moment. To me, it's about the multiplier. For every dollar spent on an NVIDIA chip, there's $8 to $10 that will be spent across software infrastructure within AI.
Right.
I think the value, when it's all said and done, I think a big part of the value is going to be use cases. And that's going to be driven by software companies, the hyperscale, Microsoft, I think Google, Amazon, from a hyperscale perspective, they will benefit. I think you look at a lot of the install base players like Adobe, Workday, Salesforce, ServiceNow, clearly Palantir. I think the monetization is really more of a 2025 event for many of the software players. So I think investors have gotten a bit
Right.
frustrated because we're kind of in between, think about it like the CapEx phase and the software phase. But I believe it's a get up, like almost get the popcorn out moment because now software hits Broadway. I think now software starts to see a lot of the benefits from a use case perspective as well as just monetization.
Got it. And when it comes to the application layer, do you see the more vertical software versus horizontal software sort of having being different in terms of how they monetize, or who's better positioned for the age of AI versus another? Or is there no real distinction between the two, you think?
I view it as more the stack players, the horizontal, that will ultimately, at least in the near term, next 12 to 18 months, that will be the big beneficiary. I think the vertical SaaS players will clearly benefit. But in the near term, it's really the stack players, it's the bigger software players that are going to benefit. And I think you look at a lot of the solutions that are coming out and where a lot of customers are heading. I mean, I continue to think it's really more, it's going to be like almost two phases. But in the near term, it's really the horizontal stack players I think benefit.
Got it.
Go ahead.
Shifting gears a bit. Tesla. Let's talk about Tesla and autonomy for a moment. You obviously believe in the future where cars, you believe in the future of autonomy. You believe in the future where cars are fully driving themselves. When we get to that point, how consolidated do you expect the car industry to be? And I ask this because in the world of self-driving, fully autonomous cars will be much more software-driven and arguably become more of a mobility commodity, if you will, than a personal consumption item. So how do you see the consolidation playing out in the car industry in that future?
Look, I think so, you're seeing headwinds even in the disruption from EV, as well as just in the auto industry. I mean, Stellantis, look at that today. I think autonomous, and I think we'll see the first sense of this at Robotaxi Day next week. I think autonomous is really going to start to converge the tech sector and the auto sector. So I don't necessarily, from a consolidation perspective, I view it a little differently. I view it that more and more the tech players are going to try to really own the software piece of auto. Now, a big thing is like Tesla's obviously on the software piece. GM's trying to own more of the software piece. But I think autonomous is going to be the biggest disruptive technology. And I could argue like FSD and autonomous is probably one of the best use cases for AI. Now, clearly,
Right.
vendors will fall by the wayside. There will be some consolidation. But I actually view autonomous as almost more the auto industry, as this all plays out, will start to be looked at more as disruptive tech rather than just traditional auto.
Right. And when it speaking of going back to consolidation, autonomy is a software problem largely, and software is usually a winner-take-all or winner-take-most type of business. So, do you see that happening in the auto software industry as well?
Yeah. Well, there's two vendors that are really owning the sector right now, right? It's Tesla, and I think next week is obviously a huge event for them. And then Waymo, in terms of the Alphabet ownership. I think you're not going to have many players that will own this market. I mean, I'm not going to say it's a winner take all, but you probably could count on one hand the amount of players that will truly benefit from autonomous. And I think it's led by Tesla. I think this, I think next week will really be like a watershed moment for Tesla, and I think for the overall industry.
Where do you see NVIDIA's autonomous efforts fitting into this? Do you think they have a promising product?
I view NVIDIA on the autonomous side eventually will partner with probably like the likes of like a Tesla. In other words, I don't see NVIDIA as the standalone side. I view them more as the supplier, right, from a chip perspective. But that's why it comes down to like autonomous, it's going to massively disrupt the industry. And I think when you think about AI use cases, FSD probably one of the best out there. So, I think this is going to be a key, call it few years ahead, in terms of also seeing how the auto industry, how they're going to go about autonomous. Do they OEM the technology? To your point, does it ultimately force consolidation? Do big tech players try to get in there? So I think these are some of the biggest dynamics that are all going to play out, really over the coming years.
And right, and then eventually a lot of these auto manufacturers could, if we kind of look at what happened to the PC industry and a lot of other technology hardware subsectors, these automakers, whether they're traditional OEMs trying to survive or startup electric vehicle companies or Chinese EV companies, could really become more of a contract manufacturer of hardware while all the value accrues to the software owners.
Yeah, I don't disagree with that. I think now what makes Tesla unique is they kind of own both pieces. And that's why Tesla trades from a disruptive technology player. Like where does let's say a BYD go? Think about some of the Chinese, but a Neo, an Xpeng. You look what's happened in the U.S. Like what do the big Detroit players do? Like do they try to go at this alone, or do they try to partner? That's why I think you are going to see more and more disruption in this overall industry.
And before we move away from NVIDIA, I do want to ask you in terms of semis, why don't you think the hyperscalers aren't a threat to NVIDIA, not just the short term, but also long term?
Yeah, look, I mean, they're kind of 25% of the capex that's going to be spent will be big tech. So that obviously is a huge beneficiary of NVIDIA. Now, in terms of like, do they then start to do their own chips? Is it competitive? Look, down the road at one point, yeah, it's possible. But the godfather of AI, Jensen and NVIDIA, are so far ahead of anyone else. So I still don't view it competitively. I view it more as maybe a co-opetition, but that's something that we don't see for the next 3, 4 years, which is why we believe like NVIDIA, that's a name that continues to move higher, like in our opinion. I'm not saying, look, AMD will be competitive and and I think that's everything Lisa Su and AMD are doing are I think super interesting. I'm probably being undervalued by the market. But I don't necessarily see competition in that sense.
As a follow-up to that, what role do you see ASICs playing in the age of AI, in the development of AI? There are both sides of the argument as to whether ASICs, obviously the pros are that they'll be more specialized, potentially cheaper, and even arguably faster and better at doing one thing specifically. But on the other hand, companies are making billions of dollars worth of investments. They want to maintain flexibility. So, what do you see ASICs doing in terms of the development of the build out of the AI infrastructure?
I think that becomes just more specialized. And look, I mean, Asia, what, 2 times in the last 6 weeks? Like, I think that's a big focus area in terms of where everything's heading. I think it's really going to be more specialization and more segmentation in terms of that market and how it all plays out for AI. No doubt, companies want to see the payback, but I think there's a recognition that this, when you think about the AI revolution, it's kind of changing the market permanently. And I think there's going to be different subsectors, not just ASICs, but pieces of software on the data center side that are going to be disrupted going forward.
And before we move away completely from semis, the global semi supply chain is among the world's most important supply chains, and it's also among the most delicate with lots of potential bottlenecks. So long term, how do you see the industry solving this issue?
I mean, look, the supply chain is going to continue to be where it is. In other words, I mean, you'll have pieces that move to India, Vietnam, and maybe some depending on tax incentives to the U.S. But it's the delicate balance, right? And I think it speaks to geopolitical, U.S.-China cold tech war. But for the foreseeable future, I mean, look, we believed it would take 3 to 5 years to move 10% of the supply chain out of China, Taiwan, and just overall Asia. If you kind of took the more dramatic sort of view. A lot of times, like when I'm especially being bullish on tech, investors or even retail, after speaking, they'll always be like, well, what about China, Taiwan? Now, look, that's a risk, right? But that was a risk 10 years ago, and now it'll be a risk 5 years from now. I think you got to look at the delicate balance in geopolitical is there's less constraints today. I think we've learned a lot from the last few years. There is more diversification. You're seeing it with Foxconn and others. And actually, like the supply chain is in very, very good shape. Definitely geopolitical issues, but that's with everything, right? In other words, like nothing's ever going to be fully clean.
Coming back to cyber, I remember a few years ago, Pat Gelsinger, when he was running VMware, talked about how there are too many vendors in cyber, and consolidation is inevitable because enterprises don't want to deal with more and more and more vendors. They want a consolidated, more of a platform approach to cyber. Do you see this happening, and what does this mean for the cyber companies in your coverage? Who benefits and who will get harmed by this?
Look, I want New York City subways to run efficiently. Like the point is, like we could want a lot of different things. Are they going to happen, right? In other words, consolidation in cybersecurity is way overdue. I mean, in other words, like there should have been more M&A activity. Ironically, the average enterprise that I talk to, they have 15, 20 point solution players in their data center for cyber. I think there's a growing need of cyber. I mean, as a percent of budgets, we think it doubles over the next 2 to 3 years. Now, I think there's ones that have gained more and more share: Palo Alto, Zscaler, CrowdStrike, CyberArk, among others. But even like when you look at the CrowdStrike Black Eye, in July, it highlights just the risk that we're seeing, in terms of where so many of these cyber players that really own the market, despite it being point solution. I just think the move to suite is just going to be very, very difficult. It's very difficult for a CIO to see that they're going to trust Microsoft on the cybersecurity side.
Huh. Can you tell us more about that?
I mean,
CIOs.
CISOs don't like. I think that's an age-old kind of debate. I mean, Microsoft is. You're never going to be a CISO or CIO that's going to go to Microsoft for security. You want point solution players. You don't want to be wed to some of the bigger players when it comes to cybersecurity. And cybersecurity is something that it could take down organizations. And you look at the specialization that we see across, each of these vendors has a place in the stack. There's a reason you go to RSA Security in San Fran in terms of the conference, and you see thousands and thousands of vendors. So I just think that there's always going to be a shadow of like a Microsoft trying to like go at the sector. But I just think the reality is that it's going to be very, very difficult to get there.
What about on the other application software areas? Do you see best of breed continuing, or do you see more platformization happening there?
I think there's definitely going to be more platformization. I mean, like even on the cybersecurity side, Palo Alto's talked about that. I do think on software, you're going to start to see more of the big software players run into each other. I think software has always been one where each one had their kind of area. And now, just given what we're seeing with AI, with shift to the cloud, it's an unprecedented market opportunity that we're seeing play out.
Okay, Dan, well, thank you so much for joining us on this Monday morning. We appreciate your time and we appreciate all of your
Thank you.
insights.
Thank you.
And Dan, thank you so much for joining me here at the New York Stock Exchange today.
Thank you. It was a pleasure.
And that will do it for Global Money Talk live from the New York Stock Exchange. We are so excited to bring you daily coverage here on SamPro TV, and you can also check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back tomorrow morning. Have a great day, and we'll see you tomorrow.